morning. This is a video newsletter for buysellshort.com for Sunday, June 29th. Ugly, ugly week in the market. Another huge down day on Friday. Here we have the Dow 15-minute chart. We broke through the bullish falling wedge to the downside. Not a good sign when that happens. We've broken pretty much every support. We're stuck now in another bullish falling wedge, but things just do not look good. Oil, new record high on Friday. They just keep gaming this oil market, and then over the weekend they were parading out more talk about bombing Iran, etc., etc. And now there's talk of the ECB raising rates this week, so it's unlikely things are going to get any better going into Monday. Here is the Dow daily chart. Big time break of the bullish falling wedge here. As I mentioned in the chat room, for us to see a bottom that we'd like to buy, we'd really want to see a 100+ point drop tomorrow and then a rally back to green, and then it may be safe to start dipping our toes into the water. RSI deeply oversold now on the Dow. Stochastics way oversold. On balance volume the lowest it's been in many months. SMH breakdown out of its wedge on Friday. Just no safe haven, and the reason is right here. Oil broke out of that pennant formation now in oil. They're just intent on running it to 150 for that Morgan Stanley target that they gave a month ago. That's been jacking the price of oil up. Just we're at the mercy of the crooks now. These brokerages, they've been destroyed in the subprime mess, and the only place for them to make money now is in oil, and they're going to do everything they can to keep the oil market going, whether or not it makes any sense at all. A couple of weeks ago, I brought up this chart, the bullish percent, NASDAQ bullish percent index. Pretty much what this tells us is overbought and oversold levels, and I had mentioned that we were at all-time highs here, a sell signal, and since then we've been down quite a bit. Is it a buy signal yet? Well, we are oversold, but the buy signal happens when it gets down to 20. We're at 34, so we've got quite a ways to go before this tells us that we need to start buying stocks left and right. Stock plays, BCON, big breakout on Friday on volume. There was a heavy volume on Friday into the close because of the Russell index rebalancing, so a lot of these stocks got really jacked up. BCON was one, so we want to see if this holds the gap on Monday. Chart looks really good. We've got a possible triple top breakout here, but the rebalancing had a lot to do with that on Friday, so let's see how that plays out. MRVC, same thing, but we got our target on this one. I mean, one day, if you had your sell out there, you got filled. It gapped all the way up to $1.45 right on the close. If you didn't get out, you may get an exit at 130 plus on Monday, or you could see it open all the way back at 120 after that spike. Chart does look really good here, but the market is crap, so anyone's guess. AMD was a trading alert, small nibble play. Just as if we do get a bounce, AMD should see a nice bounce back. As you can see, all its moving averages are way higher. This is a stock that loves its 20-day exponential. That's at 684, but it really loves its 8-day moving average. Whenever it extends above or below its 8-day moving average, it always comes back to that level. Right now, that's at 661. Target on this one, I'm looking for 640. We're going to be conservative here. It's a small scalp play, but if we don't see a bounce, that 8-day moving average will come down. But it's been a few days since it touched it, and it won't take much for this to jam right back here pretty damn fast. ACPW, painful lesson on this one. Jumped in on the sell-off on Thursday, and then it just kept plunging as a fund exited ahead of the rebalancing on quarter end. This stock does this every few weeks, and would be looking for it to bounce back for 1 or 2 days before looking to add to this one. Deeply oversold, but with oil and energy stocks running, this is one to definitely keep a close eye on, but it's also a lesson to us, play with your stops, or don't trade without having stops. I mean, an entry at 140, you should have been out of this one at 130. I should have been out of this one. Didn't, held, and paid for it. And, happens to the best of us. And, you just look at it as trading tuition and learn from the mistake. But we're going to get our money back in this one once this bottoms out. Hopefully, the quarter end window dressing selling is over and it's going to snap back. If we actually look at an extended view, it's done this a couple of times in the last 3 months. It went from $2 all the way down to a buck 38 and then rallied all the way back to $2. And then we had to go from 160 all the way to 112 and then rally all the way back. Here we've gone from 160 all the way down to 90 cents. Hey, let's see this one rally all the way back to a buck 40. Not a whole lot of stock plays though, just because this market is very, very difficult to trade right now. We're waiting for our buy signals, a sell-off, and a rally in the same day, and then you should start to see some large short covering programs go off. Right now, we need oil to go down. If oil does not go down, this economy, which is screwed, will get even more screwed, and stocks are just going to continue to get hammered. So if you're a trader, you want oil to get hammered soon. Hopefully, we get some intervention in the currency markets by the Fed and the ECB. Don't hold your breath, but that's what we need right now. That's it for the video tonight. Keeping it pretty short. Don't want to make a whole lot of bets until we see, a turn in this market. Catching knives in a falling knife market can be very painful. So, best place to be right now is on the sidelines, and any plays are considered small. That's it. I'll see you guys in the chat room tomorrow. Good night.